Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it is entitled to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so looking at the XJO today, we closed up on the high, testing resistance just around that 69.50 level. So really this resistance here at 69.44 is that last line of defense for this market before it breaks higher. You can see back here that was a key level of support and resistance all the way through. Once we clear through that, then really 7200 is very much in reach, which was approximately the all-time high back before COVID. So at this point in time, guys, look, I think there's a high likelihood of a break higher. Whether it happens this week or not, that's debatable. Okay, we're already starting to push up into the overbought area on a lot of our indicators. But you know, in saying that, we have come back to that longer term trend, broken out of a pennant, and like I said, this last line of defense, right? If that level clears, we're very likely to go and test that all-time high one way or the other. So yeah, the question is, do we have a breather beforehand? Like, by all means, we've seen these types of moves happen before, could fail again, pull back the trend and the rebound. So let's just wait and see. Next few sessions should tell us. Okay, so coming across to the US markets, you can see that they've broken much higher and really have pushed a lot higher than what our local markets have. So through Easter here, they cracked through that all-time high resistance and just created a brand new all-time high. The markets seem to love these whole numbers. So you can see it paused around 39 for a while, paused around 4,000 for a while, and the S&P 500 is probably going to pause just here around 4,100 for a little while. All indicators looking a bit overbought, so I would not be surprised to see either a small pullback in the coming sessions, or even just a bit of sideways movement. But yeah, you can see strong roaring uptrend, having pauses in between, all healthy. One of these little pullbacks might be due. Let's just see. Okay, once again, very strong movement in the short term, and should take a bit of a breather here. Okay, so the big thing at the moment in the US really is this next infrastructure stimulus plan. We've got talks of $2 trillion. Who knows what that's going to get negotiated up to or down to. The other big question around this that could move markets is how they're going to fund it. So there's lots of talks around how they possibly could, increase of corporate tax rates, a global tax, okay, for companies. So trying to target those companies that are going offshore to avoid corporate tax, those types of things. So look, that's all the big news over the next few weeks to maybe the next month that we're looking at to really guide the longer term movements of the market. As long as the market's getting stimulus, as long as there's good vaccine rollout, as long as they're keeping this virus under control, stimulus, extremely accommodative Fed and central banks of the world, the markets are going to lap this up. They love this type of news, and over the next 12 months, as long as this type of sentiment continues, then the markets should continue higher. What we've got to watch out for, where things could get a bit toppy and where we might start seeing big types of pullbacks, is when central banks will then start becoming a little bit more hawkish again. Okay, start talking about increasing interest rates. Those types of bits of news is going to be very, very bearish to the market. But look, the likelihood of that happening in the next 12 to 24 months is fairly low at this stage. At this point of time, the central banks are giving us a lot of really assurance that interest rates are staying low for a prolonged period of time. They're actually targeting a high inflation for a period of time, and really 2024 is probably going to be the target for when they might become a little bit more hawkish and wind this back a touch. So look, at this point in time, the markets have exactly what they want. Vaccine rollouts are doing very well, okay, throughout the US. A little bit lagging here in Australia, but obviously there's not as much urgency in the sense of the virus itself. From an economic point of view, the quicker the better. All right, so US is doing well with the vaccine rollout. Obviously, that's all going to continue playing out over the next 6 months. The big thing for me at the moment, Chinese markets were down quite a bit today. That could be news on the back of how the US might deal with China next, and the US is calling for a potential boycott of China in the Winter Olympics next year. They're talking maybe the allies even to join in. So that could be a bit of the news there. Obviously, there's going to be this to and fro from the US and the China in the medium term. That could cause a little bit of volatility for us. I think less so for the US. I don't think the US markets really care too much what's happening there at this stage. It does affect us though. So a lot of our companies that do export out to China, on this type of news, either pulls back a little bit or stays soft. And if you go look at our miners at the moment, it's amazing how much they've actually pulled back recently, considering how strong commodities are. And the only thing I can really blame that on would be China tensions and a little bit of uncertainty around that as well. But the next real big thing in the short term is US earnings. That kicks off next week. You've got a couple of the big banks around Wednesday in the US reporting. That will obviously see a bit of volatility around certain pockets of the market. The indices themselves tend to hold strong. We're expecting a stronger reporting season, obviously, as a lot of companies have reopened and the economy's slowly starting to reopen again. We want to start seeing that, hit the earnings as well. So we're expecting a strong earnings season compared to the previous quarter. If we don't see that, perhaps we might see a bit of a pullback. But, more times than not, they set the expectations fairly low. We see the beat of expectations and a climb of most of the market. So not long after that, we'll actually start to see some of our banks report early May. So the typical cyclical here is usually April's a fairly bullish month, pull back in May, June, and then a rise through July into August. That's your typical cyclical, right? You never 100% know the perfect day or the week of when you're going to get the moves. April in the US has already started off very, very strong, so you might see a little bit more in it, okay? But then more times than not, you'll get some form of a pullback in May or June, okay? So, yeah, I'm still bullish for the moment, guys, okay? Everything's pointing up over the next, maybe month or so, but obviously on high alert for the next big one, all right? So we tend, I've seen a lot of Mays through my trading career, a good 10% correction happen, okay? The US market could be due for one. They did have a 10% correction in the NASDAQ just recently, so maybe not, okay? But markets, if they keep rising through April, the more it goes up, the more there is a case of a big pullback come May. All right, so that's it for this week. Take care and bye for now.